Good morning all. Welcome to the 2022 RIU Explorers Conference. I can take my mask off, you can't. Thanks to Mark McGowan for allowing us to hold the show, very generous of him. Thank you and welcome to the show. On behalf of my partner Simon Hadfield, who's in the room, we welcome you to the show in what has been very trying circumstances. We thank you for your patience in having to go through all the COVID protocols of getting into the building, and that will continue for 2 days, unfortunately. But that's the rules that we play under. Welcome to all the people who are here in the room, on site, and welcome to everybody who's online. I just checked in, we have online registrations from WA, Eastern States, and overseas. So it's very, very good that all these people can watch us online, even though we are in our jail. Hopefully we can go over East soon, if they'll have us, and we can be one country again. Before I start today, we have to do the acknowledgement of the welcome to country, acknowledgement to country, the Wadjuk people of the Noongar Nation, past, present and emerging. But on the subject of emerging, rather than me bang on about it, I'd like to introduce Jessie Little to the microphone. For those that can remember or were there, last December we launched Spinifex Events, 51% Indigenous owned corporation. And Jessie and his team, his family, are the 51%. And it's something that we want to do going forward, is to have this company with us and helping us, and to try and give a bit back where we can. So rather than me talk for the moment, I'll welcome Jessie to the stage and he can do the acknowledgement to country. Jessie Little, thank you.
Hi everybody, it means hello. My mask. And Wanju, welcome. I'd just like to acknowledge the traditional owners of the Wadjuk people, of the Budja, the land that we are now on in this event we're holding here, Food Stew. And just like to pay my respect to the past, present and emerging elders. And yeah, thank you for all being here. Stu,
Thank you, Jessie. Rightio. We now have to go through the process, and a good process it is, of talking about the sponsors. So just bear with me while I get myself organised. We start with Canaccord. As we all know, Patterson's for, I think, 18 years, 19 years, now Canaccord, great supporter. And I can see the Canaccord, some of the team are in the room today, and we look forward to hearing from Paul Howard very shortly. ANZ Bank are with us again, not quite in person this year, but they're online, because their speaker is from over east. So welcome back, ANZ. Gallagher Insurance. Now, you all know Gallagher's. I'm sure most of you in this room who run mining companies are insured with Gallagher through the AMAC group. So welcome to Gallagher. Welcome to their team. To Jackie, their marketing lady. Fantastic. So great to have you back. And we welcome you one and all. HWL Elsbeth. Lawyers. This is their third year, I think they're with us. So welcome back to them. And of course, BDO. It wouldn't be a show without BDO. They've been here for 15 years. Adam Myers, you all know Adam. He'll be giving a talk tomorrow, I think. So just quickly going through the rest: Bureau Veritas, CSA, Global, Lind Partners, Como Engineers. For the very first time this year, we have two copy sponsors, and they're both new. Rio Tinto have their exploration team out in the atrium, and we have Core Plan, who are in the corner where you normally associate with coffee. So Core Plan and Rio Tinto, thanks for taking up the mantle of coffee sponsors. Please give them your attention during the day. I'm sure you will. Remember, when you're drinking coffee, you're not wearing a mask. On-site program sponsor, McKay Drilling, Lanyard sponsor, AGR, ABC Refining, Stantec are doing tonight's function out by the pool. Congratulations. Stantec's a change in name by way, so go and check out their booth. SRK, Expedio, Orlando Drilling doing the water. Once again, if you're drinking water, you're not wearing a mask. Noah's Rule, Oh, where's the phone there? Hello. Max Geo. Doing the page. Hot Chili, ENIQ hydration sponsor. Make sure you go and check out the hydration. It's used on mine sites and campsites to make sure that your staff stay hydrated and don't get sick from working in hot conditions. We have a whole host of mining companies that are coming up on the screen as we speak. So thank you to all of them for being sponsors of this show. And then we work our way through to the in-house, Resources Roadhouse, Chapter 1, Interlink Consulting, AusX, AusTex, 88 Degrees, RIU, and Vertical Events. So that is, that takes you through what I want to say about that. So what was 2021 all about? Apart from COVID and whatever, it was the year of the IPO. We had so many IPOs. And there's some great stories like Global Lithium, Charger. I mean, the two that spring to mind of companies that are up 400%, 500% on their listing. So will the IPO continue through to this year? Well, I think so. I mean, even last week, we saw Killy Resources, Killy. They listed at 150% premium. So there's still an appetite out there in the IPO market because money has to go somewhere. And I'm sure Paul will talk about that. Maybe it's not as high today as it was a few months ago, but there's still lots of money in the system and it's got to go somewhere. This time last year, a baby goat was born. And you can see the goat on the screen. It's called the tethered goat. Well, last month, the tethered goat got released. The tethered goat got released. Coming to an ASX store near you very shortly will be the Float the Goat. So that's our theme for today, Float the Goat. You'll see it out there in the exhibition area. Make sure you go and say hi to the guys. You can work out the name when you see it. So IPOs. I hope you all made some money out of IPOs. Now, while I'm in the mood for a bit of self-indulgence, at the end of the conference, we're all tired and hungry and thirsty. So Friday or next week or next month, make your way down to Squire's Loft in Subiaco for a great steak. And if you're there, I'll buy you a beer. If I'm not there, tell them Stewart sent you. Free beer on the house. Ladies and gentlemen, that's all from me. I'll pass you over now to the man they call Jerry Gannon, the great Irishman. And he will take you through the formalities and then we'll get straight on to the Craig Oliver Award. So thank you very much.
Thank you, Stewie. Thank you, Stuart. Our first order of business is the announcement and presentation of the Craig Oliver Award. Each year at the RIU Explorers Conference, this award is presented in memory of Craig Oliver, who passed away on Saturday, the 19th of June in 2010, aged 46. Craig was on the Sundance Resources plane that tragically crashed in the Congo with the loss of all on board. Craig had made a lasting contribution to Australian mining over the course of his 20-year career. Joining us today are members of Craig's family, his wife Chanel, his daughters Hannah and Sasha, Chanel's dad Bob, and Janie, Chanel's sister. The nominees for the 2022 Craig Oliver Award are as follows. De Grey Mining. De Grey created a golden buzz and gained much market interest when, in 2019, the company announced its large-scale, high-value, near-surface Hemi gold discovery within the company's 100% owned Malina project in the Pilbara region of WA. That buzz has since increased in intensity, and the market attention grew as De Grey progressed Hemi to its current state, comprising 6 main zones: Aquila, Brolga, Crow, Yukon, Eagle, and Falcon. Hemi remains open in multiple directions and significant potential remains to further extend mineralization. Extensive drilling combining air core, RC, and diamond has tested the extent of the deposit and infill in support of a maiden mineral resource estimate of 6.8 million ounces at Hemi that was released in June of 2021. And needless to say, there should be more to see here. Sandfire Resources is an Australian mining and exploration company that has been a consistent and reliable performer over 10 years at the company's DeGrussa copper gold mine. Production from DeGrussa has enabled Sandfire to grow and diversify, not just in Australia, but now across the globe through the development of new long-life copper projects in Botswana, the USA, and most recently, Spain. The Mauthio copper mine, located in the world-class Kalahari copper belt in Botswana, is on track for first production by mid-2023. The company's 87% stake in the Black Butte copper project in Montana, USA, is rapidly advancing its development following a positive feasibility study for the Johnny Lee copper deposit. And just last week, Sandfire reported completion of the US $1,865 million acquisition of 100% of the Matsa mining complex located in the world-class Iberian pyrite belt in the Huelva province of Andalusia in southwestern Spain. Matsa is a substantial polymetallic mining complex comprising 3 underground mines and a 4.7 million tons per annum central processing facility with cutting-edge technology and infrastructure and an extensive resource base with significant growth potential. Liontown Resources has had industry types yodeling the praises of the company's Kathleen Valium lithium project in WA of late, where it was established in a world-class mineral resource estimate of 156 million tons at 1.4% lithium oxide and 130 parts per million tantalum pentoxide, where a pre-feasibility study confirmed potential for a long-life, standalone mining and processing operation. Market interest reached new heights after Liontown announced a first binding offtake term sheet with one of the world's premier battery manufacturers, South Korean-based LG Energy Solution, to supply up to 150,000 dry metric tons per annum of spodumene concentrate produced at Kathleen Valley, expected to commence in 2024, representing approximately 1/3 of the project's startup production capacity of around 500,000 tons per annum. The deal is in step with Liontown's offtake strategy of targeting Tier 1 customers downstream in the global battery value chain. Western Areas is Australia's highest grade, lowest cash cost nickel producer from its 100% owned Forrestania nickel project in WA. Western Areas is also Australia's second largest sulfide nickel miner, producing approximately 22,000 to 25,000 nickel tons per annum from its Flying Fox and Spotted Quoll mines, two of the lowest cost and highest grade nickel operations in the world. With such runs on the board, there is little wonder the company was able to raise $100 million in 2021 to support the development of its Odyssey underground mine, which is progressing well with excellent advance rates being achieved, while also providing funding for Western Areas exploration portfolio. A healthy company, no matter what size, always makes an ideal takeover target, and Western Areas could not resist the approach of IGO Limited to enter a scheme implementation deed under which IGO will acquire 100% of the share capital of Western Areas. At the time discussions were announced, Western Areas shareholders were poised to receive $3.36 per Western Areas share, a healthy 35.5% premium to the company's share price of 2.48 dollars, I beg your pardon, per share at the time. Well, to say a few words and to announce the winner, we welcome Julian Hanna, who worked closely with Western Areas and is regarded as a legendary industry stalwart. Welcome along, Julian.
Get rid of this for a start. Thanks very much, Jerry. And look, I think it's a bit over the top, the legendary bit. We'll just move on and say well seasoned and been around the block a few times. But look, Firstly, really, for me, it's a great honour to be able to team up with the Craig Oliver family here and help present this really unique and prestigious award. And what Stewart really asked me to do was just to provide a little bit of colour on Craig, a very interesting character on many, many levels. And also that includes just a few photographs to show some of the things that really stood out. I hope you'll see that, and his zest for life, simply one way of looking at it, I think. And also throw some light on the origins of the award. You know, where did it come from? What was the idea behind it? And how come it survived really now into its 12th year? Firstly, I met Craig when he joined Western Areas in 2006, initially CFO, and then very quickly morphed into finance director. These were very exciting times. The China boom was well on its way and record metal prices were just around the corner. These were really boom time conditions that we landed in at that time. Craig just took on the role of managing the company's finances and also sourcing project funding for the expansion of the Forrestania Nickel project at that time with just gusto. I don't know any other word to describe it. He was just had boundless energy and he had infectious enthusiasm and really drove that process and that aspect of the business along, and it permeated all through Western Areas. I think his professional expertise soon earned him the respect of colleagues as well, and they included financiers and investors globally. So just that energy was just key to so many things. He also had a sort of an inbuilt entrepreneurial flair, and he was always looking for the next big opportunity. So behind it all, he was just a great guy to work with. And I think that can be said on behalf of all the guys at Western Areas at that time. Also, Craig was a champion of the mining industry. One of those slides back there shows that when Kevin Rudd threatened to introduce the resource profits tax in early 2010, he got out there on the streets, he lobbied politicians, he organised funds, he made sure all the right people turned up on the day, he arranged for banners to be printed, and this was for the very successful Axe the Tax rally held on the Esplanade. There were 2,000 people showed up. It was published and visualised globally. It was a very interesting time on the 9th of June 2010. And at the same time, Craig was a very dedicated family man, and he clearly enjoyed time spent with his wife, Chanel, and daughters, Hannah and Sash. And we're very lucky to have them and the rest of the family, Craig Oliver family, with us here today. I think his family, the beach lifestyle, the boating, and of course the fishing were the only things that trumped his commitment to the resource industry. He just loved fishing, big time. And, you know, I hope these photos just sort of show his enjoyment of fishing, but he also had this uncanny knack of ending up with the biggest and the best of things, you know, whether it was the largest fish in British Columbia or on a lake somewhere in the middle of Ontario with his Canadian buddies, to finding somehow the world's biggest silver spoon. I mean, this seemed to fit Craig just so well. No one's ever trumped that for a spoon, I'm sure. And then also just getting involved in on the ground in the mining and the aspects and various projects around the world that we got to look at and share time looking and enjoying it, really, is fair to say. So I think as Jerry has described it, the Craig Oliver Award is awarded to small to mid-cap Australian resource companies, which have excelled across a wide range of activities during the past 12 months. The award itself was made by Subiaco jeweller Thomas Meyerhofer. The brief given to Thomas in late 2010 was to design and fabricate not just a unique, but also an exuberant sculpture, something special with a geological and mining theme. The cost was shared at the time between RIU, Western Areas, Atlas Iron and Patterson's. I think Thomas really nailed it. He created a sculpture which is both beautiful and at the same time it's timeless as well. It's really a very special object and very appropriate, I think, here for this award. It's made from commodities that Craig had been involved with. There was copper in there, there's nickel, there's titanium, gold, silver, platinum. there's even a diamond or two on board as well. So, but the only thing left out is lithium. Sorry, guys, which nobody really cared about much in 2010 anyway. So would never cut the mustard. Previous recipients of this award have gone on to become some of the most respected and recognisable names, not only in Australia, but also globally in the resource sector. And I think also the award helps us to remember not only Craig, but also all the other people on the Sundance plane for their lasting contributions to the industry. So to wind up somehow from a group of 4 exceptional shortlisted companies, and I won't name them again, the judging panel, whoever they may be, must make a very difficult selection of that company which has gone on for that, gone that extra mile and has excelled in line with the spirit of the award. So what I'd like to do is ask Sasha Oliver to come up on stage. If you could, Sasha, thanks very much. And if you wouldn't mind announcing the winner of the 2022 Craig Oliver Award and make that presentation. Over to you.
Thank you, Julian. The winner of the Craig Oliver Award for 2022 is De Grey Mining.
And we welcome Alan Nishaw to collect the award. Oh, sorry, it's Phil.
Thank you very much. I'd like to firstly thank the conference organisers, Stewart, Jackson Prue and the Vertical Events team. Thank you to the sponsors, particularly gold sponsor Canaccord Genuity, who is co-manager of De Grey's last 2 capital raisings. Thank you to the award sponsors, Western Areas and Dave Flanagan and Canaccord. And most of all, thank you to Chanel Oliver and the Oliver family who are here today in Fremantle. It's an honour to receive this award. I never had the pleasure of meeting Craig, though his legacy and standing in our industry speaks volumes of who he was. Many of you will know Craig's contribution to Western Areas and Sundance, but I'm sure most of you don't know that he was actually director of De Grey for 2 years, from 2006 to 2008. When he left De Grey, due to his growing commitments at Western Areas, our ASX announcement expressed the company's disappointment in losing him, and I know that sentiment is shared by all of us here today. Craig helped build Western Areas into a great Australian mining company, and that's what we're aiming to do with De Grey. I'm accepting the award on behalf of a great team of people, the entire Perth site and staff contractors, our management team, including Andy Beckwith, Alan Nishaw, Rohan Deshpan, and also our CFO, Peter Canterbury, who was a colleague of Craig's at Sundance 12 years ago. And our board, including Simon Lill, Managing Director, Glenn Jardine, and the rest of the board. De Grey Story is a perfect one for an explorers conference. The Hemi discovery was in a frontier area in the Pilbara, not seen as a gold destination. We have a highly skilled and committed technical team with understanding of the geological fundamentals, strong financial backing, and a bit of persistence and luck thrown in there as well. Our philosophy as a discovery team has been a geologist's main job is to find the ore body. You can't find anything without drilling, and never die wondering. So our business development manager, Al Nishaw, will be presenting the Hemi story on Wednesday at 3:30. Otherwise, come by the De Grey booth and or you catch us for a beer afterwards. So my summary for Hemi is it's big, it'll get bigger, and it will be a very big gold mine. Thank you again.
Okay, quick photo and on we go. Okay, moving right along. Our first presentation now is a brief review of 2021 and last year's RIU market update, followed by what we expect commodities to do in 2022 and some key exploration themes impacting the industry at present. Paul Howard is a mining analyst with Canaccord Genuity, and he joins us now. Welcome along, Paul.
Delighted to be here again to present a market update and an outlook for 2022 and beyond, and indeed look at some exploration trends, which is what I'm particularly keen on. Canaccord's delighted to be the gold sponsor once again here in Fremantle. Like many of you guys presenting today, we do have disclaimers and disclosures. You can check these out on our website. So those who are less familiar with Canaccord, we're a mid-market capital markets and wealth advisory firm. We've got head offices in Sydney, Melbourne, Perth, and regional offices all the way around Australia. And we're very active in the mining and metals ECM space. We continue to rank number one in the ECM league tables in Australia. As you can see there, both by proceeds per book runner, and obviously the market share is right up there. And as I've done before, I just want to highlight the number of deals, 105 deals done in the 12 months to date. It's a real testament to the hardworking men and women we have in our firm. We're happy to deal with small, junior, mid-tier majors. So we're looking to do that again in 2022 and continue to rank highly on the league tables. So look, we like to look back and see how we've done. This is a slide that I gave last year presenting and trying to figure out, well, how well did we do? Reasonably well. We called lithium and copper to perform well, and obviously saw that nickel would do well towards the end of last year. Not so good on gold, to be honest. I stood up here and I said that we were bullish gold. We still are bullish, but we probably see a little bit of volatility, certainly in the first half of this year, and I'll touch on that. Gold was flat for the year. It was actually down in US terms, but marginally up in Aussie dollar terms. But what was good about last year, COVID recovery. I mean, we weren't all sitting here wearing masks last year, but I think things have gotten better in general within Australia and globally. And we've also seen lithium and EV related commodities really going well last year. And not so good, as I touched on, gold. You'll see the chart in the top right, all those base metals up at least 25% for the year. Whereas gold was tracking sideways, flat and down in US terms. I wasn't able to put lithium on that top chart because it did so well. Really, outperformed our expectations, and depending on what product you're looking at, it was up about 500% for the 12 months in 2021. So really, really strong performance there. And we see similar key industry themes prevailing now in 2022. So look, for 2022 on gold, near-term cautious, long-term we remain bullish on gold. Similarly, like last year, copper and nickel were bullish given those low stockpiles that we're seeing, and there's that aggressive movement into that EV space. So, people are looking to shore up supply for what's required in the future, and obviously, lithium is going to continue to perform. We think it's going to remain in deficit, that whole market, for the next few years, and probably in the short term we might see some supply response in the latter half, but we don't think that's enough to offset that demand growth. And then there's key themes we're going to look at. Adapting and reacting to COVID outbreaks, skills shortages with the lack of open borders, ESG, M&A. Going to look at some, the lack of discoveries by majors. And I'm glad Stewie mentioned it earlier on. I am going to talk about IPOs because it was a big theme last year and probably continues this year as well. So just want to start with gold. Look, near term, as I said, the first half of this year is probably going to be a bit volatile for gold, and that's driven by that rate rise expectation versus inflation. So there's a bit of balance to be found. Geopolitical issues we think is going to impact, could be to the upside with Russia and Ukraine, and that obviously would impact things like oil as well. And then Omicron on that macro sense with and other variants, I suppose, that may come. So that's probably going to impact gold in the near term. And then later on in this year, we still think once that tapering's concluded, we're going to see record debt levels, ultra low interest rates, and those inflationary concerns will probably persist once those rate rises have ceased. And then also just wanted to highlight that things like Bitcoin and cryptocurrencies remain a key competitor for gold. And we think that's might be sucking some of the life out there. But look, I don't know a lot about crypto. John Oliver, the British American comedian, summarized it quite well. He says, everything you don't know about finance combined with everything you don't know about computers. And I think that summarizes it quite well, certainly in my mind. But look, since the beginning of the pandemic, it's worth pointing out that gold has been up both in US and Aussie dollar terms, yet at least the producers that we cover at Canaccord, they're down. Certainly the Aussie gold index is also down. So there's a clear disconnect we see between gold equities and the gold price. And so that's creating some extremely good value in the gold names at present. And then when you add in this M&A that we're seeing in the gold space, it's certainly sort of spicing things up. And we're learning that funds, a lot of the funds are quite underweight in gold and looking to get back in at the right time. Could be the opportunity now. So just in base metals, a very strong 2021. And it started very well this year as well. So it's that surging demand, that sort of continued supply destruction in the places like South America. And that strong EV sentiment is certainly prevailing there. Last year, I told you we liked copper. We continue to like copper. We think it's got the right ingredients to continue pushing higher. There's that EV sentiment associated with copper. There's ongoing supply threats from South America. And there's very low inventories. I just read today that's the lowest inventories. I think it's in Shanghai in 16 years or something. So, really, really low copper inventories out there, which is impacting the price, we think. And it's very same for nickel, we think. There's that upward trajectory of low stocks, lots of demand for only stainless steel, but also in the battery materials. And obviously, the requirement for batteries, of which nickel is going to be a key component, is going to more than double over the next few years. So certainly a lot more of a demand for nickel. But there is a bit of a risk that we're seeing with additional supply this year with HPAL projects in Indonesia coming online. But they actually tend to have teething issues. So on the balance, we actually think nickel won't necessarily be impacted too much by that additional supply. And also we've seen things like, we just touched on earlier on, IGO Western Areas M&A action happening. And obviously Wyloo and BHP had a crack at Noront with Wyloo winning out there. So clearly a lot of M&A happening in that nickel space. Just shows a lack of quality projects out there. And there are some people are going to present their projects over the next couple of days, so have a listen to them. And then just finally in the commodity space on lithium. We think the market remains in deficit until 24, 25. But in the short term, there probably will be some supply response, maybe from the brines over in South America. That's probably in the second half of this year. But that's probably not enough to offset that demand. And so we think the prices will prevail and give a buoyant lithium market for this year. So looking good in that space as well. So this is a slide I've had before. Just really highlighting that we've got a core set of producers, and we've had some recent entrants into that league, and there's a couple there I've highlighted are about to move up very soon. But also, we've also seen some people or some companies falling back down under cost pressures. But really, there's a lack of developers in that gold space, and we're sort of, are they being picked off along the way? We've seen a lot of gold M&A, so are people getting to that development space, and then the mid-tier gold producers are now just acquiring them. So we're not seeing many companies make that jump, and because there is risk as a single asset, a gold developer in going into production. And we'll just touch on some of those points shortly. But look, in the exploration space, there's a whole raft, and this is a slide I had last year. This whole raft of juniors with resources. There's 70 odd on this slide here. I see Oteco had a new resource out, so that needs to be updated on this slide. That was out this morning. But look, a raft of juniors with some solid resources looking to move into development or perhaps get picked off along the way as we see this gold M&A heating up, certainly in Western Australia. And then just wanted to highlight that this is exploration spend in the blue bars. That when you spend more money on exploration, you make more discoveries. It makes complete sense, very simple. But if you actually look at who the companies making these discoveries, at the time, they were all juniors. With the exception of Winu from Rio in 2019. And it's great to see that Rio Exploration is here at the conference this week, shows that they're taking exploration seriously. And you know, perhaps they're the only major that makes discoveries because they take exploration seriously. Or perhaps the majors are more interested in growing through M&A. But because it does take a long time from discovery to actually, you know, making a dollar out of that. So if you want quick turnaround, inorganic growth could be the quicker way to go. I've just updated this slide from last year. It's an exploration trend that we see across a number of commodities. Gold is in the top left, nickel in the top right, copper in the bottom left, and lithium in the bottom right. And we see the line on each chart is the commodity price. When the commodity price is high, there's more exploration spend. This is global exploration spend on these bars. So we just look at gold, for example, 2011, 2012, the gold price was reasonably high and there was a lot of exploration spend. You know, it makes a lot of sense. However, in 2020 and 2021, gold price was relatively high again, yet we didn't see that exploration spend happening. And so there's this gap we see. And like, you know, why is that? We see it a little bit in copper, see it in nickel. Lithium's a bit different. There was a lag initially, perhaps as people were upskilling on their knowledge, but we're certainly starting to see it now. Lithium price is ticking up, but we're not necessarily, but we're seeing a lot of exploration spend there. But just drawing down a little bit more into that gold, well, why is that gap there? And I talked about it last year, and I've been thinking about it for a while. What's going on? And I think perhaps that gap is being filled by M&A. So what's happening is we're not putting the money into the ground. People are then taking the money and actually just acquiring assets with that instead of spending it. And there's a few things to sort of point out why that is. I've got this other bit of data here. I thought I was going to find out that there was less money spent on greenfields. What these bars show, you got greenfields in the green, obviously, and you've got late stage and mine site or near mine exploration spend in the other two bars. And it's consistent. Like every year, it's about 26% spend on greenfields, and it averages about 37 to each of the other components there. And it hasn't changed in 2021. So it's not like people were spending more money on brownfields than exploration, whatever. It's the same all the time. So that didn't really help me when I was looking at that data, but I went to the effort of getting it. I thought it was interesting, so I thought I'd show you guys at least. But why is that gap there? I think it's M&A. And here's why. So these blue bars are M&A spend over the last, 11 years. And so you look at 2021, huge amount of M&A. And there's a list of gold acquisitions and mergers down the bottom there. But so I think that's somewhat explains that money wasn't spent on exploration, but it was then actually put into mergers. But looking at 2020, it doesn't actually fit the thesis here. And I think that's probably COVID. And if you think about it, you know, start of 2020, we didn't know what the world held in store. And perhaps companies were like, oh, well, we actually do want to acquire this company or we want to merge or whatever. But geez, we don't know what's going on. So let's just hold back. And perhaps that's what happened in 2020. And then got into 2021, everything sort of looked a little bit brighter. Floodgates opened and all this M&A started happening. So perhaps some of that 2021 M&A spend could actually be attributed back to 2020. But I sort of think that's where we're going, that we're seeing more M&A and less exploration spend, and COVID has impacted that, it delayed it somewhat. But why do we want to have some M&A? If I'm a resource company, junior explorer who's got a nice resource, want to move it forward to development, there is a risk. We've got, you know, small balance sheet. You'd have a single asset producer. Your skill set is focused on exploration. We've seen companies like Bardock and Geopacific fall short of that rising costs, and you don't have the balance sheet to support that. So that's going to be a challenge. And then similarly, if I'm a producer and I want to get bigger, I want to remain relevant. You see Northern Star and Saracen merging. You go, geez, I want to sort of keep up with those guys. You want to do that instantly. So you're not going to want to explore and take 5 years to find something and bring it into production. You can do that a lot quicker just through M&A. And then obviously you want to qualify for ETFs like the GDXJ and those sort of things. And there's certain milestones you need to have, of which production is one of them. So I think there's sometimes if you want to do it quickly, you need to just acquire a company. And as I said, I'm glad Stewie mentioned IPOs. I did a bit of digging on how many there has been in the last few years. The grey bars are all IPOs on the ASX, and the blue bars are IPOs in the resources and the services sector. So that's mining services. 107 last year in our industry. And And so, like, I was thinking about it and skill shortages and that sort of stuff. So to build a new company, you're going to have a CEO, maybe a CFO or a finance director, and you could probably contract in field staff. But there's some core positions that need to be filled. And is that creating a gap? So, if I want to go and, run a new IPO, I probably would have left some middle management position in an established company. And is that creating a gap somewhere that needs to be filled? And just, given the skill shortages and the border closures, is that putting pressure on somewhere? Just posing a question, don't really have an answer for you at the moment, but just putting it out there. So the IPOs are great, but I'm just wondering, how is it impacting on skill shortages? Just looking on the performance of the IPOs, 107 IPOs, medium market cap for these at IPO was about 15 million, and they raised about 6.5. The average change, so 44% up. So the IPOs, on average, did very well, and I suppose it highlights the requirement for a balanced portfolio. If you put $100 on each of these IPOs last year, it's 10,700 invested. Before brokerage, you're making nearly $5,000, so that's a pretty good return, I reckon. And one thing also I noticed, and we sort of have a bit of a giggle about it, was 27% of the IPOs had a number in the ticker. So, they used to have ABC.ASX, and now there's always little numbers appearing in them. So I just thought that was a bit of a trivial thing to highlight, that 27% of the new IPOs last year had that in. But the split there, you'll see, 36% gold, 20% copper, and then filtering down nickel, lithium. And actually, if you actually look at how they perform, I've tried to color code it a bit. A distinct green color, I suppose, to the left-hand side with all the great performances. And they're mostly in that lithium and those critical metal space. There's a smattering of golds in there, which is great to see. And obviously quite a few nickel there on the left-hand side too. But equally, there has been some in negative territory, and they're mostly golden colors on the right-hand side. And I suppose really, like when I worked in exploration, I was really frustrated that we were hemmed into a financial year. Like, it takes longer to make discoveries. And, there's one particular IPO I'm thinking of that I think is a fantastic IPO. It's in frontier, jurisdiction. And it takes time. You got to get on the ground, and you got to, start with your geophysics and then your geochem. And so these things don't, they're not going to be a 10 bagger overnight. So it just, it needs to be a bit of patience in that space. But look, just to summarize, guys, lithium, we think that pricing is going to remain strong. There will be a little bit of additional supply coming on towards the end of the year, but really in the longer term, that demand is going to outweigh that supply. Like we said before, copper and nickel, low stockpiles and that aggressive movement into the EV space is really going to drive them forward. Gold, near term, we're cautious. Longer term, we remain bullish on gold. We'll see how we mark ourselves against this one next year. But look, there's key themes, skills shortages and lack of open borders. There's been a big emphasis on ESG. We talk to a lot of funds about ESG all the time. Lots of M&A happening. We've seen that in the WA gold space. We think that's going to continue. And there is a lack of new discoveries, but we do find that the discoveries are being made by the explorers. We're at the RIU Explorers Conference, so let's leave the exploration to the explorers. I wish everyone here the best of luck over the next few days and into 2022. So thank you very much.
Paul Howard, affecting a very pleasing accent. Venture Minerals is a successful exploration company leveraged to multiple commodities and currently targeting ESG tin production at its Mount Lindsay project, one of the largest undeveloped tin projects in the world. We welcome Venture Minerals MD, Andrew Radonjic, who will discuss this emerging EV metal, more versatile than you would think. Welcome, Andrew.
Thank you, Jerry. Yeah, I'd certainly like to have a chat with Paul afterwards and I'll talk about over a beer, maybe his thoughts on tin going forwards. I do note that on the graph, it was almost the best performing, besides lithium, of course, but it nearly doubled last year. So Venture Minerals is very much a tin story, and I'll elaborate on that. Good morning, ladies and gentlemen, and certainly it's a pleasure being the first ASX company presenting this conference. And again, thank you to Vertical Events for doing another highly successful event. Today, I'd like to talk about our flagship Mount Lindsay Tin Tungsten project on the west coast of Tasmania, Chalice's joint venture activities on our Southwest Nickel Copper PGE project here in WA, And Mount Lindsay, just to recap for those who don't know much about us, we've already spent more than $35 million on this project. We've drilled more than 100,000 metres of diamond core drilling. We've completed an open pit feasibility study in 2012. And like Jerry said, it's one of the largest undeveloped tin deposits in the world. We are located in a tier 1 ESG jurisdiction with access to renewable energy with hydropower at a time when tin prices are at record levels. It's around $44,000 per tonne, over 4 times the price of copper. There's no doubt tin is an EV metal, and certainly the time for tin is now. It's a disclaimer. Like I said, we're very highly leveraged. We're onto a new feasibility study focused on an underground. We're doing a smaller, higher grade version of what we did before, but there's a whole heap of work there we can leverage. We've begun exploration again for the first time in what's now 9 years, and we've had immediate success with 2 new discoveries. So we'll get back onto that shortly. Chalice just recently came up with 11 new EM targets on our Tour Julimar lookalike target down on the southwest. So I look forward to Chalice drilling that later this year. The Riley iron ore mine, which we brought into production late last year as the prices started receding. It's under care and maintenance at the moment, but certainly it's prepared for a quick restart should conditions become more favourable. Golden Grove North, I won't talk much about today. We've got some great downhole EM conductors on our VMS targets just north of the Golden Grove mine. And out to the 250 kilometres east of here, we've got the Coolum project, where we've got some very compelling nickel copper PGE targets. There's a share price, and there's a tin graph just below. As you can see, that's had a pretty stellar year last year. So I think it was around about $20,000 this time last year, and here we are at in excess of $40,000. We've got 80,000 tonnes of tin metal in JORC compliant resource, and our market cap is $70 million. So I'll let you do the maths on that. Board, it's been with this company since we started. We're big believers in the Mount Lindsay tin project. Very lucky to have Stewart Owen, Dr. Stewart Owen, a geologist of his calibre, still working for us. He's very passionate, and he's built that geological model, and he's looking forward to making further discoveries there in the west coast of Tasmania. Just going down onto the project now, and you can see that there's a whole heap of infrastructure, but more importantly, the west coast of Tasmania has several mines. It's a great pedigree, 140 years of mining. We have the Helia VMS deposit. Rosebery's been going for 85 years, owned by MMG now. We've got the Renison Bell, Australia's own tin mine, around about 10 or 12 kilometres away from us, down the west coast of Tasmania. Savage River, the only magnetite mine in Australia, which is making a lot of money at the moment. So there's an infrastructure and hydropower and road, rail, etc. we can tap into there. So like I said, there's 140 years of mining there, so it's something that some people still aren't aware of. Now, a little bit about tin, and I suppose most people don't think of tin cans potentially, but it's very much about solder. So half the use of tin is solder, and solder is the glue that connects everything that we have. So in terms of the fourth industrial revolution, where we electrify everything, tin's can play a very important part of that. And certainly, electric vehicles, it's in the anodes of batteries. Like I said, it's conductive. Certainly, that's a big increase in demand coming forward. And it's very much in energy storage and wind power. It's in the solar panels. It's in the form of tin foil, which is used quite extensively. And it's used to also make copper wiring resistive to oxidation. Like I said before, there's even though tin went through a phase about 10 years ago, we hit over $30,000 a tonne in tin. We went through miniaturization phase, but as I don't know about you, but phones seem to be getting bigger. We seem to have more than one phone. Working from home has obviously had a big impact in terms of the amount of electronic gadgetry, if you like, or equipment we have. We're still going through a lead-3 conversion to solder. As the 5G network comes out, there's going to be a lot more circuitry required there, so expect a boost for demand in tin from that. We need another 60,000 tonnes of tin metal by 2030 just to keep up with the EV demand. So at the moment, the world only produces around about 350,000 tonnes of tin. So it's only an extra 16-70% increase, and I'm not sure where that's going to come from. And energy storage, again, tin is at the cutting edge of new developments in improving the efficiencies of lithium-ion batteries going forward. Tin, if you look at where does it come from in the world, and half it's still alluvial, so it's still pretty old-fashioned. It's not modern day. It's certainly not ESG compliant. 90% of the world's tin is from high-risk jurisdictions. So certainly developing a tin project in Australia is very attractive on the ESG side of things. Mount Lindesay is not only a tin project, its co-product is tungsten, contributes almost equally to the revenue of the project. Tungsten is a critical mineral. Tin isn't, it's just off the list, but certainly is everywhere else in the world. And tungsten's critical because China dominates the market. It's a strategic metal. It's used in military applications and semiconductors, steel hardening, drill bits, tungsten carbide you would have heard of. And very much, you can see that drill hole we drilled back in 2008. We certainly got a fair amount of that sitting within our drill core. And it's not a separate ore body. It's sitting, if you look at the core, metre by metre, you're seeing tin and then you're seeing tungsten. So it's a very strategic commodity, and certainly we'll be looking to leverage off any sort of availability in terms of the government critical minerals facilitation office, looking to lend money in developing tungsten mines in Australia. Like I said before, the projects, we've been on this since 2007. It was discovered in 1909. It was mined back then. And we have now JORC compliant resource in excess of 80,000 tonnes of tin metal, and that will grow. We've also got quite a significant amount of tungsten, 3.2 million metric tonne units. And you can see from the drill results there before, some significant results in our two deposits at Mount Lindesay. The McDonald Chute, which we'd just completed doing some drilling, and announced this morning another intersection in our MET program as part of the feasibility. We've also got the Radford Chute sitting parallel, only 180 metres away, a little bit more tungsten rich, but they're sort of like King Island type grades. Like I said, 100,000 metres diamond core drilling. We've already spent 70% is in the measured and indicated category. So this is a Rolls Royce resource. We've already drilled this out. So any work we're doing forward will be either geotech or metallurgical type drilling. The open pit feasibility study did produce at the back end of it a 75% tin concentrate. So we're looking to incorporate that knowledge into our new revised gravity-focused flow sheet. Like I said before, tin's at record levels, tungsten's looking very attractive, and we have many, many more targets to test in this area. We are no doubt in a premier tin district, and with hydropower going through, we're certainly in a tier 1 ESG jurisdiction. Just looking at the exploration a little bit more focused now. You can see the results we've generated previously. This is the Renison Bell tin mine. It's been operating since 1880s, and we have the Renison mine sequence going onto our project here. We've had early success drilling on these targets, and there's 7 more targets, including the Big Wilson discovery. We've got 17 metres at 2% tin back in 2012. So we started exploring for the first time in 9 years last year, and we got instant success along strike from Renison. We also have an alluvial tin field here, 500,000 tonnes at 0.9%, a nice little pit at Reward, which we're looking to develop. And this area here is completely unexplored, so we're looking to do a lot more drilling in that area in the coming months. Along strike to Mount Lindesay, we had immediate success in hole 338. We intersected scar mineralisation. When you drill this deposit out, we know that we're very close to mineralisation in hole 338. So we're pretty excited with the follow-up drilling to again start in the coming months. Just recently, we announced a record-breaking intersection as part of our MET program. We drilled down the McDonald Chute, and you could see plenty of cassiterite, plenty of scheelite, but it just gives you a bit of an idea that this project contains a fair amount of value which is unrecognised by the market. Now moving on to the Chalice joint venture, which is pretty exciting that Chalice came and spoke to us 3 months after the discovery of Julimar, but clearly they recognise, and in the announcement of July 2020, they stated a Julimar lookalike. And we did a joint venture, as you can see, $3.7 million and 70%. We're in that West Yilgarn province, so we're very well located. But the most compelling part about it really is this image here. And when you look at the mag, we've got a very, very similar image. We're in chrome-rich or rocks, so very similar sort of geology. And certainly we can see why Chalice were very interested in joint venturing into this ground and applying all their skills and knowledge that they've learnt in the Chalice discovery. So what we've done is we flew an airborne EM back in 2018. We drilled one of those targets, about 6.5 kilometres of EM targets, very similar to the new Hartock EM, which has obviously been superseded since. And we got 13 airborne EM anomalies. And we got massive sulfide in our first round of drilling, but we were looking for VMS, that's copper, lead, zinc. We found copper, nickel, and cobalt. So there was no Julimar footprint or pigeonhole to classify that intersection. So we were struggling to work out what it was, but clearly Chalice knew that was the case there. So they've gone through to hit the ground. They did some ground EM to follow up the airborne EM, and naturally they expect success. And certainly what happened is that they generated another 11 EM targets on the ground over the area. They got very close. We just nicked, looks like one of the plates sitting here with that massive sulfide intersection. We're 10 metres away from this EM plate with 86 metres of disseminated sulfide with anomalous PGEs. So I'm looking very much forward to seeing what Chalice's drilling is going to do over the coming months. They have until the 29th of July to spend another $800,000. It rains, we're in a state forest. They'll need to get that drilling completed and that spend done probably by the beginning of June. A little bit about the iron ore project just before we sign off here. The iron ore project, we've commissioned a plant, we've done the first shipment, so it's all ready and done. So certainly we are very much ready to go and take advantage of any price rise increases. The iron ore price has been going up, which is no surprise. The Olympic Games now just coming to the back end of that, there certainly could be a nice little sweet spot for the iron ore price going forward. Obviously, shipping is still reasonably high, but the discount is working its way down. So certainly we're very much ready. We have about a third of a shipment sitting on the deck. So once that iron ore prices go up and begin to show a bit of stability, we'll be able to sort of get a shipment out very quickly indeed. Planned activities in 2022, big focus on Mount Lindsay, did a capital raising, we did $10 million, heavily oversubscribed SPP, which we completed between Christmas and New Year. And you can see we'll be spending probably half of that on the feasibility study. The other half we hope to expend on the exploration drilling and make Australia's new next tin discovery. In the meantime, we'll continue with the permitting as well. And we've just submitted late last year an underground mine permit for Mount Lindsay. So we'll go through that process. Chalice, obviously, they'll continue to look through the EM results and plan those drill targets, and we're hoping to see that drilling happen in, if not late Q1, then certainly early Q2. Our other two projects, we are looking to do some airborne EM at the Coolin project. There is about a 6-month delay between booking an EM survey and getting it done, and we'll also likewise do some EM work on our Golden Grove North project. So just summarising, certainly Mount Lindsay is well positioned with a tin market where it is today. It's a very advanced project. We are an ESG jurisdiction, and we're in a tier 1 and premier tin province. So we're certainly going to see exploration success. We've got 48 EM targets to test. The first 2 have been successful already, so just follow up on those 2. The ground EM works generated some targets for Chalice to prepare for drilling in the first half of 2022, and the Riley mine presents a free option to the iron ore price for the company and its shareholders. Thank you.
Thank you, Andrew. Mark Williams is Managing Director of RED 5 Limited. He's unable to join us in person, but sent us this recorded presentation. Can anybody lip read? Take 2.
RED 5 has 2 gold mines in the eastern goldfields of Western Australia, Stralow and King of the Hills. Over the next 15 minutes, let me share with you the Red 5 story and how Red 5 is emerging to be Australia's next mid-tier gold producer. It was in 2017 that Red 5 bought these two assets for a total of $34.5 million. Since then, we haven't looked back. We are currently spending $226 million at King of the Hills to get the project to become a tier 1 gold mine. With the first gold pour due next quarter, once this pour has been completed, King of the Hills will rate as a top 10 largest endowed gold mine in Australia, with a mineral resource of 4.1 million ounces and an ore reserve of 2.4 million ounces. And quite amazingly, it's open in all directions. Many of you may remember Red 5 and our history as we started in the Philippines. We have transitioned away from the Philippines with the sale of the Sienna Gold Project. Whilst we still maintain a lucrative royalty, we have been able to put the sale assets into strengthening our balance sheet as we focus here in Australia. Red 5 at the end of December had close to $50 million in cash and bullion, although I note $28 million was restricted. We have a debt facility with a tripartite bank of Macquarie, BNP Paribas and HSBC, a total facility of $175 million. And at the end of December, we had drawn down just over $77 million of that facility. We have a very supportive share register with long-term shareholders of Electrum, Ruffer and Franklin, and with Victus Morgan progressing as and emerging as the largest shareholder with just over 15% of the stock. Interesting to note that it was in just over 2 years ago, in 2020, when the board of directors took the bold decision to raise the majority of the equity for the King of the Hills project. There was a number of factors that influenced this decision, and it was this decision that has really put us into this prime position of being able to deliver first gold on time and within budget. One of the key and really interesting aspects of King of the Hills is that it's a brownfield site. Because it's a brownfield site with over 2 million ounces that's been depleted over some 30 years of both the open pit and the underground. With this brownfield nature, all of the key technical aspects have been mitigated. So from a technical aspect, we are heavily de-risked. A large number of the key aspects, such as the mineralogy, the metallurgy, the geology, the mineability, the geotechnical properties, are really well understood. The other benefit that we have being a brownfield site is that we have tens and tens of millions of dollars of infrastructure that's already existing, and they are both from the open pit and the underground. So we have a significant advantage at King of the Hills from a capital cost point of view compared to a brownfield, compared to a greenfield site. With all of these parameters, the board took the decision to raise the equity back in 2020. That enabled us to recruit our key construction staff who worked with the feasibility study staff. So when the feasibility study was completed in September of 2020, we were able to start construction straight away. So how have we progressed over the past 17 months of construction? Well, let me share with you these photographs and you can see for yourself. One of the first key aspects that we focused on is the Accommodation Village. And this is a tick in the box, job done. We have a very modern facility that is fully operational. It's a 380-bed facility just north of Leonora. With all the modern facilities and being a new camp, it is one of our key selling points for attracting and retaining staff, which again, in this market is so important. We have one of the shortest FIFO flights from Perth to Leonora, and it's only a 15-minute short drive to the processing and accommodation village. The gyratory crusher has been completed. We have a 6 million tonne mezzo gyratory crusher that was completed in January, and I'm delighted to say that commissioning has already commenced. The power station is a 30 megawatt hybrid power station, which is a combination of solar and gas. One of the other advantages of King of the Hills is that we're only a short distance from the Goldfields gas pipeline of about 13 kilometres, and we are tapping into that pipeline over the coming weeks. That will obviously feed the majority of the power station, which we will look to be operational in the coming weeks. The heart of the processing plant is a large 36-foot FL Schmidt SAG mill. All key components of the mill are in place, and we will look to start commissioning the mill in the coming weeks. From this video, you can see on the left-hand side the crusher and its components being commissioned. We race along the stacker conveyor. Under the stacker conveyor, of course, will be the coarse ore stockpile. We have these apron feeders under the concrete to be able to feed the mill conveyor as we go past the lime silo. The CIL tanks are having their finishing touches of a resistant paint. In the background, you can see the stores, the processing facilities, and just coming into view on the right-hand side, the power station. In the background, for the first time in 18 years, you can see the large bulk haul trucks that are starting to be running from just a few weeks ago. So it was really the decision back in March of 2020, raising the majority of the equity, working in parallel, hand in hand with the study team, that's really enabled us to be able to get ahead of the curve when it comes to skill shortages, the supply chain, and also the cost inflation, with us having a EPC contractor, which is on a fixed term and a fixed price contract. So with these factors, we are confident with everything that we know that the construction will be completed on schedule and within budget. I'm delighted to have kept showing this timetable. As you can see, there's a number of ticks as we have completed all of these key facilities, and we haven't changed these dates with the commissioning upon us now, the mine contractor being mobilised, and the first gold pour in the coming months. With the commencement of mining, that was a milestone that we focused on some 6 months ago, and we've worked hand in hand with McMahon contractors, and I'm delighted to say that we were able to hit our target of the first mining being commenced exactly on that target date that we set ourselves 6 months ago. Here you can see the photograph of the large 360-ton excavator feeding that 190-ton haul pack truck. We've worked over the past 6 months very tightly with Geology and McMahon's and Red 5 being able to work on a very detailed mine schedule, and we have that first 13-week mine schedule nailed down that we will be following very precisely. We took the decision to start the grade control early, and we started grade control drilling in August of last year for the underground, and on the surface in October. It's a really, really tight pattern on the surface of a 7 by 7 meters. So when we start that mining, that 13-week mining schedule, we will have a really good handle on exactly what the mine schedule and the geology and the assays represent. As I come to finish, the last couple of slides, all important with the geology. And as I touched on, because it's a brownfield site with over 700 kilometres of existing drilling conducted by us and the former owners, really the geology is well understood and we have a lot of information. You know, we have a really supersized project with 4.1 million ounces as resource and over 2.4 million ounces as a reserve, which is really quite incredible. And as we are on the throes of the first gold production, we will become Australia's next mid-tier gold producer. Quite amazingly, the geology, with being a large granodiorite, remains open in all directions. With regards to the metallurgy, similar to the geology, it's well understood with a lot of information. We have a strategic advantage at King of the Hills, being a very low processing cost of less than $12 a tonne. This is for several reasons. Firstly, because of the large economies of scale of 4.7 million tonnes per annum. Secondly, we have very favourable metallurgical properties. Coarse grind size of 150 microns, low relatively bond working index, low reagent use, low cyanide use. And thirdly, as I touched on, we have also access to the low cost power being supplied by the Goldfields gas pipeline. So ladies and gentlemen, let me wrap up with a value chart, and I believe that Red 5 is a standout value for the Australian gold producers. As you can see here, enterprise value by reserve ounce compares very favourably from a value opportunity point of view compared to our peer groups. In particular, if you have a look at Gold Road and Capricorn. Gold Road were in a similar timetable for us. About 2 years ago, they had a very smooth ramp up in their first gold and into steady state production, and the same with Capricorn a few months ago. Both companies were very successful, and you could see their share price re-rate as such. And I believe, ladies and gentlemen, that with a smooth ramp up and first gold production, then there's potential opportunity for the Red 5 shareholders. Thank you very much for your interest in the Red 5 story today.
Thank you. And that was a waste of applause because he won't hear it. He's not here. Poseidon Nickel's Peter Harold, process engineer with over 30 years corporate experience in the minerals industry, specializing in financing, marketing, operating, and business development. He's managing director and CEO of Poseidon Nickel, and he joins us with the Poseidon Story. Peter, welcome.
Thanks, Jerry, and good morning, everybody. I'll get straight into it. Read the disclaimer at your leisure. Look, the Poseidon Story is a really exciting one, given the way that the sector's heading. We've just had Paul Howard talk about nickel and all the other commodities, and certainly you want to be in the nickel market. You want to be in nickel at the moment. It's looking fantastic. We've got 400,000 tonnes of nickel in resource, 3 historic nickel operations who between them produced over 350,000 tonnes of nickel. So if you're looking at systems that combine nearly 800,000 tonnes of nickel. So these are very, very big nickel systems. We've got 2 processing plants. You just saw a presentation previously. They've just spent $188 million on a processing plant. We've got 2 processing plants, one that can do 2 million tonnes and one that can do 1.5 million tonnes, sitting there almost ready to go. Just need a little bit of love. We've got a tailings project, which we're actually just in the process of looking for a partner to develop. That's the one at Windara. And we're targeting production next year, which is pretty exciting as well. And we've had a lot of exploration success too. In terms of our share price performance, we've pretty much tracked the nickel price. You can see there with a few blips when we put out some high-grade discovery at Golden Swan and also Silver Swan. Share registries changed a little bit. Black Mountain came in about 3 years ago. They've sold down about a third of their position last year. And then Twiggy, who's been involved in this business since about 2007. This was his first sort of foray back into nickel after Anaconda. And he was the chairman back at one stage. Now, obviously, things have got a bit busy for him and he's doing lots of other things. Naront, especially in the nickel space, he's been buying into Western areas recently. So it would appear that some of the money that's been sold from his sell down of Poseidon's gone into some of his other nickel investments. That's fine with us. He's been a great supporter. You know, money is mobile, it moves around. And what's been great is that his last trade, he was able to sell his entire block to, as we understand it, one institutional investor. So there's a lot more interest in the stock, which is great. So, you know, it just means that there's liquidity there, which is fantastic. And then we've still got lots of mums and dads and high net worth. So got about 9,000 shareholders and some of them have been there for, you know, the best part of 20 years. So it's great to see some improvement in the share price in the last couple of years. The corporate strategy is really to get back into production again as soon as we can. We believe that with the two assets that we've got, we could achieve about 15,000 tonnes of production at least if we got Black Swan out, Lake Johnson going again in the next couple of years. But we're also targeting exploration. We've got a lot of activity going on now at Black Swan, but also we're about to get going at Lake Johnson again, which hasn't had any exploration done for many, many years. So we're pretty excited about that. And then also, once we get these two concentrators going, we're going to be, you know, a regional feed plant. So it's going to be a little bit like the Kambalda mill. So at the moment, with BHP restarting that for the Mincor Cassini asset, that's really the only option. But once we get Black Swan going, and then hopefully Lake Johnson, we'll have two other plants going. So that'll be a really good opportunity for people that are proximal to us, that have got assets that wouldn't sort of justify a standalone mill, but could feed into us. So we see that as an opportunity as well. In terms of the executive team, myself, Brendan Shalders, who's been with us for just about the same time. I'll have Dave Maxton, who's a fantastic metallurgist and is project director and running the study on Black Swan. Andy Pearce has joined us, exploration manager, has been with us about 18 months. And really pleased to announce that Craig Jones has just signed up with us yesterday. Starts in a couple of weeks. So Craig was just recently the COO of Bellevue Gold. So great to have Craig on board. Craig worked with me at Panoramic and I know him really well. It's going to be a fantastic asset for us. And Anthony Caputo, who does a fantastic job up at the mine site. So that's the team and really good to see all those guys working hard for us. I won't spend too much time on the nickel market outlook. It's been well covered by Paul, but just to say that if you look at all of the commodities there, nickel 4 times the current production rate is what they're anticipating in the next 30 years. So that's going to be a wonderful increase. And the only way that you're going to get all that nickel into the market is if the price holds up or gets even higher. So I think the incentive price has got to go up for people to develop some of these bigger projects. So I think we're in the right space at the right time. And it's for copper, cobalt, lithium, you know, all the battery products. So let's talk about Black Swan. The history there, I was working with MPI when we discovered this back in 1995, and it was a joint venture with Outokumpu. So we developed the Silver Swan mine and processing plant, and we started shipping concentrate at about 97. It was then sold to, in 99, the nickel price got, believe it or not, below $2 a pound. And at a 14% in situ ore body, we couldn't make any money. Crazy. So we sold it back to Outokumpu, and then a couple of years later, Outokumpu sold it back to MPI. By then I'd left. MPI was then floated, taken over by Lion Ore. Then Lion Ore got taken over by Norilsk, and Poseidon bought this asset from Norilsk in about 2014. And they had produced, between all those companies, nearly 180,000 tonnes of nickel. About 140,000 tonnes came out of the Silver Swan channel alone. We've still got around about 180,000 tonnes of contained nickel in resources, a combination of open pit and underground, and also in some tailings. And the focus is to fill the mill. we've got a 2.2 million tonne plant. There's also a 150,000 tonne plant that we built back in 97 when I was at MPI. The big plant, we're going to derate that to about 1.1 million, and we're going to put open pit and underground material through that. And we're going to continue to explore as well. Just in terms of the actual channel, you can see there's the open pit, which we're going to mine again. There's the underground. So you see there, the blue at the top is Signet. The purple is all the Silver Swan channel at all the different ore bodies that were mined all the way down to about 1.3 kilometres below surface. And then right down the bottom there, you can see the red. That's the area that we have, and we're going to looking to mine that. The decline's located right down to the bottom. It's only about 100 metres from the mineralisation, and we're currently got a jumbo in there now just doing the rehab, and we're going to clear that out completely. So that'll be cleared out by the end of the month, and we can actually get back right down to the bottom, and we're going to do a bit of drilling down the bottom. There's an EM target or an EM plate that we want to target down the bottom there. The Southern Terrace is also a new area that's opened up. That could be another channel, we don't know yet. And you can see there the red and the green, that's the new discovery Golden Swan, about 6,000 tonnes of nickel, and that certainly will go into the mine plan. We put a drive across there to do the drilling so that we can access that. And so that'll go into the mine plan for the restart. And there's also potential below the bottom of the open pit. There's been a lot of work done by the previous owners, and this could be, a big system which goes quite a bit deeper. So we're hoping that there's a second pit, maybe a cutback, and we can chase the ore further. So we're drilling at the moment from underground back up into that area and looking to see how much more of that serpentinite ore there is and how big and how long the project can be. There's also been some great exploration success just recently. The guys done and the girls have done a fantastic job. Some of these holes, I mean, people talk about high grade. This is high grade, 19%, 21%. That's what you call high grade. And we've got a lot of this. And if you want to see some, it's at our booth. One of the holes is out there. So come and have a look at that. Andy's brought it down for us for you to have a look at. He's at the booth, so you can have a chat. But this is really amazing material. And you don't need a lot of width of this material to get a lot of tons of nickel. So this is going to be a very, very important part of the feed into the mill. So the plan is to, as I said before, Black Swan open pit material, Silver Swan and Golden Swan underground. And then we're going to mix a little bit of Silver Swan tailings in, the old tailings from the original plant. And the reason we're going to do that is to bring the iron MgO ratio into a better level. As most people know, MgO is a bit of a problem in smelting. And so the lower the MgO or the higher the iron MgO ratio, the better. And so we can get ours down to a manageable level by just blending in the tailings. And there's plenty of those. So that's been something that David Maxton's really come together with the metallurgy, and it's fantastic. And then obviously future feed, we could look at actually trucking Windara down. It's about 300 kilometres, and we've got 150,000 tonnes of about 1.5% underground material there, or bringing in anything proximal from existing ore bodies in the vicinity. The work that was done by GRs last year has sort of suggested that about a $22 million cost to refurb that plant and about 6 months. Now, obviously, with the cost escalations, we're expecting that number to creep up a little bit. They're well underway with the detailed engineering studies. It was a 13-week job. They started about 2 weeks ago. So we'd hope to have that finished in about May and the feasibility study finished in July. And we've already been out to the market with a typical concentrate specification, and we've been knocked over in the rush. Very saleable concentrate, lots of indicative offers, and people, even sort of unexpectedly offering us finance already, even before we had a feasibility study. It just demonstrates how important. We probably had about 20 parties approach us. Some of them even battery manufacturers that they don't have a plant to treat the concentrate. They just want to get access to the nickel units. So that's the timetable. It's a busy slide, but I guess the real focus is final investment decision mid-July of this year. And then if that's on track and we stick to the current plans, we could actually be putting ore through the concentrator in about March of next year. So about 13 months from today. So we would be the next nickel producer behind Mincor. So Panoramic's restarted, Mincor's about to produce, and we'd be the next ones after them. So I've got 5 minutes to talk about the rest. It's a little bit like the old K-Tel ads. There's also the steak knives, and Lake Johnson's certainly a very big steak knife. That's the plant, about 1.5 million tonnes, mined about 100,000 tonnes of contained nickel in concentrate between from the late 90s until 2013, I think was the last time they were operating this plant. In very good condition, well-built plant. We've just had a study done, just basically an estimate, and GRs have come up with $31 million in 7 months. Versus to build one of these from new, and the cost of it would have to be $150 million north of that. By the time you've got permits and approvals and all the environmental studies and tailings dam approvals, it'd be a 3 or 4 year exercise. So we're talking 7 months. So the leverage here is incredible. There's 3.5 million tonnes at 1.5% nickel underground in Maggie Hayes, 50,000 tonnes of nickel. And once we've finished the bankable feasibility study on Black Swan and got that to a point where we're going, then we can refocus on this project and have a look at doing a feasibility study on that. But what we are going to do is start drilling. We had New Exco do a full review of all the data. There's a lot of historical data, very busy slide, but basically all the colours there are potential targets. So the blue, the green and the red. And we're going to focus initially on what they call the Western Ultramafic. So we've actually been out to tender for about 15,000 metres of RC, and we're hoping the POW is in, and we're just hoping to get some feedback that we can start certainly in the second quarter. So that's very exciting as well. And if we could find another Maggie Hayes, 3.5%, that would be certainly a game changer for that project. Mount Windara, the original Poseidon asset, a lot of people made and lost a lot of money on the previous Windara. 1969, this was discovered. All the infrastructure has been taken away, but obviously the underground is still there. About 84,000 tonnes of nickel mined. As I said before, about 150,000 tonnes of nickel underground. Previous management did a lot of work on this, and they discovered Cerberus, which is 70,000 tonnes of contained nickel. We've done a feasibility study on the gold tailings, 180,000 ounces. Quite a nice little project, but we're a nickel. We want to be a nickel miner, so we're going to basically farm this asset out. So Liam Twigger's group, Argonaut PCF, are helping us with that, and we were expecting indicative offers in yesterday, so I haven't chased him up yet to see how we went, but we had about 11 or 12 parties in the data room. And then what we'll also look to do is whether we could mine nickel and either truck it down to Black Swan or take it to BHP at Leinster. So a lot of options there. So look, the whole strategy is to fill that mill at Black Swan. So currently the 1.1 million tonne case, see if we can find some more material, whether it's open pit and or underground material, look at other feeds, whether that be Windara or proximal assets as well, and then continue to explore to add mine life. One thing I would also mention is we have signed an MOU with a company called Pure Battery Technologies on the electric vehicle thematic. They are looking at building a PCAM, which is a precursor cathode active material plant in Kalgoorlie. It's about a $500 million investment. They're talking about having this operating by mid-24. And if they did, that would be a wonderful opportunity for us to put concentrate into this plant. So it's basically a POX plant, so pressure oxidation or leaching. You produce an intermediate, like a mixed hydroxide precipitate, then it goes through to PCAM. So that would be a fantastic value add in Western Australia. These guys are dead serious. They're out raising money at the moment. They're a private company. I'm backing these guys and they're going to get there. And I think that you'll see a wonderful opportunity here for Black Swan and Lake Johnson potentially to be feed into this plant. So with 30 seconds to go, the key deliverables are to convert all those resources we have into reserves at Black Swan, to finish the feasibility study and to make a decision to start again. At this stage, we're targeting a July FID. With Windara, have a look at that study about shipping ore either to Black Swan or up to Leinster and get that gold tailings project going and make some money out of that. And at Lake Johnson, get drilling again. And then when we've got some time, do that full feasibility study and look at getting that into production after we get Black Swan going. So it's going to be a busy couple of years. Thank you very much.
Northern Minerals is leading the charge in relation to producing heavy rare earths to supply the EV market through its Browns Range project in the Kimberleys. To bring us up to date, we welcome CEO Mark Tory. Welcome, Mark.
Thank you very much. Yeah, thanks to Stewie and the crew for putting on such a great conference here. It always works out really well. There's obviously been a lot of discussion around critical minerals, and obviously heavy rare earths and rare earths in particular are going to be vital and critical in the EV industry in relation to permanent magnets. You can read the disclaimer at your leisure. For us, obviously, we produce dysprosium and terbium up at Browns Range. That's a heavy rare earth. They go into the permanent magnets, which obviously supply the EV industry. They go into electric drivetrains, and they're forecast to increase, as you've seen and will see over the next few days, quite substantially, and I'll show you further down in the presentation. It also has a range of military applications, as well as being used in medical and technical and robotics. Where we are, we're up in the northeast of Western Australia, going over into the NT. And we're about 160 km to the southeast of Halls Creek. We're in a tier 1 jurisdiction. Obviously, Australia is one of the world's most proven and safe, reliable jurisdictions for mining and mineral processing. We know the Critical Minerals Facilitation Office has been set up in January 2020, and we've been liaising with them ever since they were established. And they're obviously helping and assisting a lot of critical mineral companies to make sure they know where to go get funding and to assist through government relations. We know that within Australia, it's very secure tenement legislation, and obviously the environmental approvals framework is well known, and obviously benefits us as local operators and the established trade, etc. You know, what we've got to compare to is the fact that in China, which produce over 98% of heavy rare earths, our production is ethical. And so when we're talking about ESG, and you're talking about heavy rare earths going into all sorts of different applications, it's not ESG compliant. You can see on here where we've got the Chinese way of processing their ionic clays. So they drill holes up into the hillside, pour ammonia sulfate into it, collect about 70% of it into the sumps down the bottom, and the other 30% goes into the environment. Obviously, to reprocess that in a different manner is going to have additional costs. And given the fact that they just have 20 to 40 ppm of dysprosium, compared to our 600 to 800 ppm up at Browns Range, it's going to cost them a lot more. So our aspiration as Northern Minerals is for us to be a principal supplier of ethically produced rare earth separated products with a world-class heavy rare earth inventory. We've had a 12-year, $300 million journey. So we've spent over $300 million up on site. That's from 2010, and that's gone through the whole process of discovery, exploration, evaluation, and as well as building a pilot plant up there. So we've been testing the pilot plant for the last 3 years, and we're just coming to the end of that journey of finishing up the pilot plant, and the results of the test work has been very positive. Our main focus for 2022, we want to complete a strategic review of what we want to do in relation to processing potential. We want to continue our exploration to aim at expand our resource base, and obviously evaluate some other corporate opportunities that we're looking at the moment. So this is the rare earth magnet supply chain. As you can see, China dominates this. And the reason they dominate it, as I said before, is that they have 98% of heavy rare earths, and heavy rare earths go into the magnets. So without that, the whole downstream processing does not work in relation to getting final product being electric vehicles and hybrid vehicles, etc. So where we're able to do through our pilot plant, we were able to produce a mixed carbonate, which you can see down the bottom. The next step would be separation, which we've been doing some test work on, and then getting into oxide to metal. And what the rest of the Western world needs to do is to get this whole supply chain, which is going to be external to China, and that's going to be the difficulty, and that's going to take a lot of time to get there. We see the demand for EVs continuing to grow, and you probably see very similar graphs to this over the next few days. But as you can see from the graph, when we're sitting back here in 2020, it's mainly internal combustion engines which are the main sale items. But as we move down through the years, the demand is for more electric vehicles and hybrid vehicles. And when we get to this stage here, this is where, when I talk about the whole supply chain for the magnet industry, that's where China dominates it. And in my humble opinion, China's going to be the only place that we are going to be able to buy electric vehicles and hybrid vehicles from for the next 10 or 15 years, because they're not going to supply permanent magnets or heavy rare earth materials to the rest of the Western world. So we'll be buying Chinese-based EVs and hybrids. It's the only place we can buy it from. That's because of the lack of raw resources. We know that rare earths are classified as critical. And as I said, there's a very limited supply, and that's where Northern can step in and be a supply option for the rest of the world. We've seen pricing go up over the last, in particular, 2 years. You can see the graph that's in the middle here, that goes back 11, 12 years. And you can see the spike there, and that was due to just the political issues between Japan and China. But it sat at a normal level, if you can call it normal, but it was basically controlled by China to make sure that, we don't have other external parties coming in and having supply. What we've seen, to me, over the last couple of years, and we've seen DY go up, nearly double over the last, in particular, probably 15, 16 months, is the fact that it's become more market driven, where we can see, the Western world starting to realise that there's going to be a shortage of heavy rare earths and starting to stock them themselves. Same thing with terbium. You can see it with all of these pricing. Dysprosium and terbium make up about 80% of our basket value. So obviously, as these prices are going up, the value of the inventory we have in ground is also going up. And yttrium is about 60% of our basket. And, yttrium's gone up nearly 3 times in the space of, almost 7 or 8 months. So again, that all leads to, the economics of a full-scale project being highly likely. So our strategy for downstream processing, we're currently conducting a review in relation to that strategy for downstream processing, and that's using all the results from the test work that we've had from up on site. One of the learnings that we have had from our pilot plan is that we'll only ever build the beneficiation plant up on site. If we go down the route of a hydromet and a separation plant, that would be somewhere outside of Brown's Range and closer to a population base, cheaper power, cheaper reagents, etc. Still looking at selling a concentrate from a full-scale beneficiation plant. And we're also looking at some corporate transactions and joint ventures. One of the things that we've been able to do over the last 6 to 8 months is put a lot more money into exploration. And we've had some really good results in 2021. Spent nearly $5 million just on exploration, with 17,500 metres of RC drilling and over 2,000 metres of diamond drilling. Continue to get some good results from Dazzler. We've got encouraging results from our Banshee drilling, and we've got prospectivity at some new prospects that we have up around Browns Range at Cyclops and Rock Slider. We've got also really good assay results from Toad, Polaris and Mystique, with rock chip results as well from Margaret and Sway. And what you can see by this is that we've got such a large area up there and the prospectivity is huge, and we're just continuing to find new prospects, which is really encouraging for our explorationists. What we're looking at is looking at Dazzler style unconformities down through here, and that's why we're seeing a lot of the new prospects coming up down in that area. So for us, obviously Dazzler, the grade is king. So we've had grades up to 10 times what we have on the average of Browns Range. And as I said, it's the lookalikes that we're the focus of our exploration program. We've got an inferred mineral resource there that you can see. We've had some really good intercepts at Dazzler, again at plus 7% TREO. Banshee is a really interesting prospect for us. We had Banshee, Banshee West and Banshee South. We had a resource there, which was over 175 by 150 metres at Banshee. We've done some drilling during 2021, which indicates that there's actually mineralisation over 400 by 400 metres, which means it could be a very large, low-grade deposit at near surface, which would be able to put through a processing plant. And having the pilot plant up on site and having a separation and an ore sorter up there at site, we're able to actually do some test work of the Banshee ore through the ore sorter, which was very positive. Cyclops prospect, another interesting one. It's got the Wolverine style hematite xenotime breccia. You can see by the picture there, it's very, very, very similar to our Wolverine diamond core. And we're getting grades, as we've seen there, at 15.65 metres at 1.83% TREO from just 24 metres down. There's strong potential for us to extend that high-grade intercepts at depth, and which would improve our economic viability for it. Rock Slider is another one. We had strong PXRF and radiometric anomalies. We did some RC drilling up there, and we got 103 metres at 0.32% TREO from just 15 metres down. So again, close to surface. It's 100 plus metre strike length, open to the north-northwest, and we'll do some more follow-up there in 2022. Wolverine, obviously that's our resource. So, that's our major resource. Did some deep diamond drilling there over the last 6 months as well. Got a good hit at 4.06% TREO for 28.6 metres at 400 metres depth. And we've got some priority holes that we're going to follow up in 2022 at the bottom, which you can see down here, both in the blue and the red, just to see how far the resource extends and to try and extend our resource in total. So that's just on the WA side. So we've got the whole Browns Range dome, and as you can see here, probably 80% of the dome is on the NT side. So part of our exploration strategy for 2022 is to start looking at prospects that we've got over in the Northern Territory side. So our exploration group is going to be starting that shortly. Now, we've got more than 2,300 square kilometres of tenure to evaluate. It's huge. And, our strategy is we want to get a mineral resource that's 20 plus years, which would be fantastic. So not only do we have Browns Range, but we've also got Boulder Ridge, which is to the south in the Northern Territory. Had some really good rock chip results there, 12% TREO, including 1.15% DY. So we've got a work plan there for this year to do some more detailed mapping and some RC scout drilling. This is right next door to the Kili Kili project with PVW Resources. We've also had similar rock chip results, which shows that the region is prospective. John Galt is another one to the north of Browns Range. And obviously we've got huge TREO up there, 42% rock chips, 95% heavy REO. Also had some copper anomalies there. So looking to do a work program there, but we're also looking to see if there's anyone that might want to come in and do a joint venture or farm in. So anyone wants to talk to us about it, please see us at the booth. Yeah, quick corporate details. You can probably see that in the slide program. I won't run through it. Why we have potential? We've been the only significant producer of heavy rare earths outside of China over the last 3 years. We've got a lot of IP within the company in relation to the reduction of that REC. We've got a commitment to actually realising exploration upside that we have. We've got a very strong balance sheet. We've got no debt, and we're in that leading, tier 1 jurisdiction. Thank you very much.
Genesis recently announced some exciting drill results from its Ulysses project, providing clear evidence of the potential to expand the current 1.6 million ounce mineral resource. Here to tell you about it is Genesis MD Michael Fowler. Welcome, Michael.
Thanks, Jerry. Good morning, everyone. Thanks for coming along today. Thanks to Stu and the team for putting on another great show. So what I'll do today is I'll introduce you to our Ulysses project, for those that don't know it, talk about our recent results and what's going to happen over the next couple of months as we finalise our management transition. So why Genesis? Well, our Ulysses project's located in the heart of the Eastern Goldfields. It's right where you want to be. We're surrounded by a number of very large gold deposits, and we're in an area of world-class mining infrastructure that just keeps getting better every day. We're 20 to 40 kilometres south of Leonora, 200 kilometres north of Kalgoorlie, and access to our projects easily done from the Goldfields Highway. Importantly, and probably most importantly, the project covers highly prospective rocks from a gold point of view. We've built the resource up to 1.6 million ounces over the last 3 years, and that's come about through our exploration success and the acquisition of the Kookynie tenements. We continue to invest dollars into the ground, having spent over $28 million over the last 3 years. That trend of dollars into the ground will continue for the foreseeable future, and we expect to see the resultant resource growth from that expenditure subject to results. So in summary, with Ulysses, we've got a great project and a great location. We've seen plenty of resource growth. We're well funded, plenty of drilling going on and plenty of news flow from that drilling. So it's a very good time to be a shareholder of Genesis. Just touching on the strategic funding and board restructure that was announced last year. So in late November at our AGM, the shareholders approved the restructure, and that's going to be led by Raleigh Finlayson. Raleigh will start in the very near term. He's already started a bit of work, and it's great to have him involved with the company. You can see the response in our share price on announcement. So it's been a fantastic thing for all shareholders. Looking at the Ulysses project in a bit more detail now, we announced the acquisition of the Kookynie tenements in June of 2020. That was a big step for us. It consolidated a key bit of ground between our original Ulysses deposit and the Orient Well deposit, which is shown on the slide there. It's the first time this corridor of highly mineralised ground is being held by the one company. The red shaded area you can see there is our 100% owned tenements, and the orange area is the Desdemona South joint venture we have with Kin Mining. We've done a stack of drilling over the last couple of years, and that's all gone really well, and that's a real credit to our exploration team and our exploration manager, Hayden Hadlow, what's been fairly tough at times. So we've had some fantastic results in the last 6 months that I've highlighted there. The beauty about these results are not all from the one deposit or the one area. You can see they're scattered across our whole project area. I'm sure over the next 12 to 24 months, there'll be plenty more of these to come. Looking at our resource growth, in January of 2016, we had 150,000 ounces. We've now got more than 1.6 million ounces, and we'll soon update, do a resource update, and we're looking forward to seeing what that turns out. We currently have just under 1 million ounces in measured and indicated resources. It's come at a pretty good cost of just over $25 an ounce, and that's acquisition and discovery costs. So our drilling in 2022, it's going to continue to be all about expanding on our existing resources and looking for new discoveries within the mine environments and outside of those mine environments. You can see the breakdown of the resources in that corridor between Ulysses and Orient Well. And one thing to mention before I leave this slide is when we acquired the Ulysses deposit in 2015, the resource stood at 135,000 ounces. The last bit of mining and exploration had taken place in 2002. So between 2002 and 2015, when we acquired it, nothing happened at that deposit. It's the same story with the Kukaini tenements, the ABC deposits, Orient Well and Puzzle, where the majority of work done to date had been in the 1990s and up to the early 2000s. And then work essentially stopped. And it wasn't until we acquired the tenements in 2020 that it began again. So what I'm trying to get across is that work is really just starting on this whole area through here. There's a lot more upside and a lot of good news to come. So over the next few slides, we'll just look at the various deposits that we have. We'll start off with our flagship Ulysses deposit. This is a high-grade gold system. We currently have 838,000 ounces, and importantly, we have a nice 705,000 high-grade ounces at 4.5 grams per tonne. This deposit starts at surface, stretches over about 1.5 kilometres. We've taken it down dip about 750 metres, about 400 metres below surface. You can see all those nice drill results there highlighted. They're all true width intercepts. The main control on mineralisation here is what we call the Ulysses Shear, and the outcrop position of the Ulysses Shear is highlighted on the top left-hand corner there in that plan view. The shear trends in a west-northwest orientation and dips off to the north-northeast. We've done a lot of work on understanding how to mine this deposit over the last 3 years, and we're really comfortable with where we're at with that, and we see no issues going forward. What we plan on doing with the Ulysses deposit will be outlined over the next 3 months as REL comes on board. Moving over to the ABC area, this is centred 5 kilometres to the east of Ulysses. Got a nice shallow resource of 460,000 ounces here. And again, like Ulysses, this is a large mineralised system. It stretches over 1.8 kilometres of strike, and it's completely open. A little bit on the geology. The bulk of the mineralisation that's been identified to date is being hosted within the butterfly dolerite, and that's highlighted by that dark green shaded unit that runs east-west across the page there in the centre. We have another dolerite unit called the Butterfly North dolerite that runs across the top, and the King dolerite. We have a number of highly prospective structures to follow up. So they're either generally a northeast shallowly dipping structure, such as the Admiral Shear and the Clark Shear that are highlighted on the plan there, or east-west trending structures such as the Hercules Shear that's highlighted there as well. So we have all the right rock types and the highly prospective structures. There's plenty of upside here. And just some of the work that we've been doing over the past 6 months, some of the results have been shown there. Had some good success in what we call the Admiral Deeps area. At King, we've started to expand on the resource there. It's a very shallow resource at the moment. And at Butterfly North and Clark, we continue to get some very pleasing results. Our drilling in the first half of 2022 will continue to concentrate on those areas. So there's plenty of drilling happening and plenty of news flow to come from that drilling. Moving over to the Orient Well area now. This is centred 5 kilometres to the east of the ABC area. We've got a shallow resource here of 247,000 ounces. The main bit of that resource comes from the Orient Well deposit itself, which hosts 189,000 ounces of gold at the moment and soon to increase. That resource of 189,000 ounces sits underneath the old Orient Well pit that was mined in the mid-1990s and extends off to the bottom right-hand corner of the slide as well. Mineralisation here is mainly hosted within a rhyolite unit, a subvolcanic intrusion, which is a bit different to the mafic-dominated host rocks at Ulysses in the ABC area. But it's equally as prospective. One of the things that we've been doing over the last 6 months is starting to explore the hanging wall position of the main rhyolite unit, and we're starting to get some very encouraging results. We reported a result of 50 metres at 0.6 grams per tonne last week. While it's not super high grade, it's probably the only hole into this hanging wall position, and it's completely open at this point and stretches over 1.8 kilometres of strike where we've got a target there. Looking at a long section on this slide, so a section along the strike of the ore body. We released some drilling results last week, shown on the left-hand side of the slide there, some nice robust zones of mineralisation. In the first half of 2022, we'll be looking to consolidate the drilling in that area to the south on the left-hand side there, in where it's highlighted the target zone. So we've got a program of drilling going in there to expand on that resource and also underneath the main zone, which is that right-hand target zone. So plenty of work to be done here and plenty of news flow to come from that drilling. And just finally with Orient Well, a couple of cross sections through the area there. On the left-hand side, that section is through the southern part of the resource area. So that area that we've been drilling recently, you can see some nice wide zones of mineralisation. This sits under a zone of depletion in the saprolite, and we have some transported material down to about 20 metres of depth. The right-hand slide there is a section just to the south of the old open pit, and you can see some nice high-grade results in there. So moving on to the puzzle area now, where we've had some pretty exciting drill results over the past 12 months. The puzzle pit itself sits just to the east of Kukaini, the town of Kukaini. This is about 13 kilometres south of, or southeast of the Orient Well area, and about 25 kilometres by road from our Ulysses deposit. The current resource there is 59,000 ounces, and that sits beneath the puzzle pit that's highlighted on the plan there. So really, since April of 21, when we started drilling down in this area, we've completed about 21,000 metres of drilling. Got some fantastic results there that are listed on the left-hand side and shown on the plan view. So what we have here is an exploration target just in this area, over 2 kilometres of strike. We've identified the Puzzle North area, which is over about 700 metres at the moment, and it's still open in all directions. Drilling in the first half of this year will concentrate on Puzzle North again, that area where there's no drilling between Puzzle North and Puzzle, and to the south of the Puzzle pit itself. Mineralisation here is closely associated with the granite greenstone contact. I've highlighted the outcrop position of the granite greenstone contact with that black dashed line that runs through the slide there. The majority of the mineralisation we've seen to date is within the granite body. There's a cross section there through the Puzzle North deposit. You can see there, as I mentioned, the mineralisation is all restricted to the granite body. We're seeing widths of mineralisation from 20 to plus 100 metres wide. On average, we've taken it down about 100 metres below surface at the moment, completely open at depth, and a stack of drilling to be done over the next 6, 12, 24 months here. The gold mineralisations associated with disseminated pyrite and veinlets of pyrite and a bit of quartz veining, and certainly there's some hematite dusting associated with the granite. Metallurgically, it looks like the gold just falls out of this, so that's pretty pleasing. So while we're working away on all those resources and known deposits, we've got about 40 kilometres of strike to have a good look at over the coming years. So we've got a real pipeline of both near mine and regional targets. Just back to that Orient Well to Ulysses corridor, we've done a lot of mapping, interpretation and 3D modelling. It's come up with a number of targets that will gradually work our way through, as I mentioned, over the foreseeable future. And just back to the puzzle area, you can see the Puzzle North and Puzzle deposits up the top end of that slide. We've now got about 10 kilometres of this granite greenstone contact. It's very prospective. It's very exciting exploration target. We've acquired, and we've just acquired another 4 kilometres to the southeast to really take in that whole strike extent. So there's plenty of work to be done here, as I've mentioned. So in summary, Genesis is in a great position, as good as it's ever been. There's plenty of news to come, plenty of things happening, and it'll be an exciting time going ahead. Thank you very much.
Bellevue Gold CEO Darren Stralow is an experienced mining executive and qualified mining engineer with over 20 years industry experience. He was a member of the senior management team at Northern Star Resources for over 10 years, with roles including head of operations and head of business development during a period of exceptional growth. He has extensive experience in strategy development and execution, building and operating modern mining operations, business integration and transformation, and building high-performance teams. Welcome along, Darren.
Thank you very much. And thanks to RIU for having me here today. This is my first opportunity to present the Bellevue story. I've been with the company since the 10th of January, and we've managed to do a lot of work in that time, and I'm really pleased to share that with you. Here are the updated disclaimers available on the ASX. And look, I truly am very excited to present this Bellevue story to everyone. This is week 6 now for me in the chair. And, I joined the company after over a decade with Northern Star. What I've seen here in these first few weeks is a project that truly does have tier 1 characteristics, and everything from a technical perspective absolutely checks out and is really sound. From that technical perspective, it's really geology 101, it's mining 101, and it's processing 101. And we have a really good team, a really strong team that's looking forward to build this project over the next 18 months. Once built, this Bellevue project will be one of Australia's best mines. It'll be high grade, low cost, producing circa 200,000 ounces per annum at an all-in sustaining cost of about $1,000 an ounce. And we have drill rigs turning and identifying resource extensions and upgrades as we speak. We had an announcement this morning which had a number of these results out. And we're setting up for long term in a district where similar mines to this, similar underground mines will continue for decades. This long-term view allows us to make long-term decisions for the benefit of everybody. And we are committed to being a sustainable gold mining company, a green and gold company. And there are really exciting things happening in this space, particularly from a power generation perspective, that we're able to take advantage of. And from a mining perspective, look, there simply aren't going to be many surprises when we get underground here. I mean, we're already underground. We've done 4 kilometres of underground development. We have a history of production from this mine. We've got 2 diamond drill rigs turning as we speak, and we know exactly what to expect. And most importantly, we're fully funded to production. with $373 million of total liquidity available to build the project. And, you know, having a project of such high quality brings with it a number of competitive advantages. We have one of Australia's highest grade and highest margin gold mines. It's on the cusp of production and of construction, and we've got exciting exploration potential and an accelerated growth timeline that we're going to hit over the next 18 months. We have a really good team in place, and it's really going to be that real people, real profits, and real growth coming up. But the company's not standing still as we embark on this journey from explorer to developer to producer. Growth is still the main focus, both in optimizing the execution plan and continuing to drill out the deposit and extend the mine plan. And don't forget these tier 1 characteristics that the deposit has. We have grade and scale, and this will elevate the mine into the upper echelon of producing mines, and this will result in significant profitability, which will set us apart from our peers. From an ESG and carbon emissions perspective, there's simply never been a better time to build a mine. And Bellevue have committed top to bottom in the company from the start to be a green and gold miner that capitalizes on these opportunities that are available to us. And if you zoom out and have a look at the macro landscape, there simply aren't many deposits that has the characteristics of Bellevue worldwide around. So, you know, if you look at mines that are over 180,000 ounces per annum, over 5 gram per tonne head grade, and in tier 1 jurisdictions, there's only 7 of these deposits currently in operation. And when Bellevue's up and running, it's going to be the only deposit worldwide with these characteristics that's not owned by a global gold major. And we're on the cusp. We've started building this mine. You'll see later in the presentation, but we've commenced the building of the 330-person camp, and this puts us on that pathway to production. And what you can see on the graph here is the share price performance of other similar single asset gold development companies as they've gone through this journey in recent times. We have a really strong board and management. So I think a credit to Steve and the team for really focusing on this over the past 18 months and building up a really engaged board and really engaged management team that have all the skill sets required to build a project of the quality of Bellevue. You know, and when you have a project, that has the quality that Bellevue does, you're actually able to continue to attract a really high quality team. And we're seeing this through all levels of the business now. So as we move through to this construction phase and we're putting new people on, what we're seeing is that we're getting multiple high quality candidates for every role that we're advertising because it's such a good project. We're attracting some really good people. You know, Bill Sterling and I are the 2 new additions to that. We both started in January, both from Northern Star. Bill recruited into Northern Star about 7 or 8 years ago, and I've brought over to Bellevue to run the project for me. Bill's, you know, one of the big young talents in the mining industry, and we're really glad to have him on board to really drive that underground productivity and look after the underground contracts and all that important stuff. So the exploration and development strategy that we're going to pursue at Bellevue is nothing different to what we've done in the past 5 years to deliver the market-leading returns that we've seen. Bellevue's share price growth to date has been delivered by exploration success, leading to expanded mining inventory, in turn leading to increased project economics. This is a circular process and will continue. There's no doubt we'll continue to see resources and reserves increase as we get further underground and expose more drilling horizons. And the results that we put on the ASX today with a bunch of these drill hits, both inside and outside of resource wireframes, demonstrate that. So we're going to extend these resource wireframes. We'll convert the areas of inferred as we go, which will in turn lead to increased reserves, resources, and most importantly for a mining engineer like myself, increased profitable tonnes into the mine plan. The overall project economics will continue to be updated as we construct and continue to update and tweak the mining plan in order to improve productivity. and we'll continue to optimize this project from a geological and operational point of view to ensure that this cycle continues through that construction process. So our exploration announcement this morning had some of these results on it, but I mean, you can see some of the numbers here and they're absolutely phenomenal. And these are both inside and outside of our current resource wireframes. This deposit is open in every direction, and that is not just at depth, that is along strike, that is in and out of the page with multiple lodes all around the place. And we'll continue to expand and drill this as we get further underground. At the moment, we have 2 underground fronts, one to the north and one to the south that we have drill rigs in, and we'll continue to move those drill rigs down as we develop more. And one of the benefits that we have, the starting points that we have coming in, is that we already have a 3 million ounce resource to look at. Of that, only 50% is in the current mining plan from feasibility study 2. And those red areas that you see there are areas that we're going to target and convert as we get more drilling horizons underground. One of the benefits of this mine plan is that there's actually distinct mining areas underground, so that once we're down there and once we're in full production, we'll be mining from between 3 and 5 mining areas at any one time, which is going to allow us to really focus on and drive productivity. So as I said, the camp construction's commenced. What you can see there is the first 80 rooms in a 330-person camp that have landed and are available for use. Here's the Paris portal. This is the main access to the mine, which was cut 1.5 years ago. And we've completed over 4 kilometres of development to date in order to establish 2 separate mining fronts to the north and south, targeting the priority areas for exploration, definition, and eventually production. And in taking the over 1,100 development rounds to date, we've learned a hell of a lot about the rock mass. And any old timer that worked at this deposit in its heyday will tell you that this rock is very hard and very competent, and that's what we found. All areas underground only require bolts and mesh as ground support, which is a dream for jumbo operators. We have 2 specialist drill rigs drilling out the deposit from underground, and compared to surface drilling, this results in a reduction in drilling cost per metre, coupled with shorter holes to get to the target depth, meaning an overall 65% reduction in cost per effective drill metre. Coming out of the portal, we'll start to look at the infrastructure that was laid out in FS2, which was released in mid-2021. We'll move on here to look at our 1 million tonne per annum process plant. This is a very stock standard gold plant, 1 million tonne per annum, 3-stage crush to ball mill, gravity circuit to standard CIL, with phenomenal recovery, 60% through the gravity circuit and 97% recovery overall. It's a very standard plant, very good metallurgy at Bellevue. We move on to look at the offices, the workshops, and then up over the waste dump, tailings dam, and up to the power plant. So this plant was envisaged as a solar and gas plant as a part of feasibility study 2. And a lot of work's gone on in the background since then to look at integrating wind power and get even better results from a greenhouse gas emissions perspective. And then we go back to the camp at the end. So you shouldn't assume that the FS2 numbers that we put out last year was where it would finish for us in terms of optimizing the mine plan. So as we've gotten underground and as we've looked around, we found that these really excellent ground conditions allow for a change and an optimization of the mine plan. And this has been a huge focus for Bill and I since we started with the company over a month ago. In fact, it's been the #1 focus for us. We've looked at this execution plan and we've looked at a number of options which we expect to significantly deliver value to this project. The ground conditions at Bellevue are first class. We're going to utilise these ground conditions to simplify and optimise this mine plan. And the changes that we're looking at are nothing out of the ordinary. It's really mining 101. It's a top-down mining sequence. We're going to remove CRF from the first 2 years. We'll put in larger ore drives so that we can standardise equipment across operating and capital areas. We're going to increase the level spacing, introduce mechanical slot rising to increase reliability across our stoping fronts. and focus on sub-vertical areas of the mine in those critical first 3 years. And the result of these adjustments is either a reduction in cost or an increase in productivity, and generally both of the above. And this expected reduction in pre-capital costs couldn't come at a better time in the industry, as the whole industry is under pressure from rising costs. And as more resources and reserves are added, we'll continue to update this plan. All of this work has been done in just a month, and we'll continue to update it as we go along. I've already discussed the process plant. So 1 million tonne per annum plant, pretty standard. But what we've been able to do as we've designed this plant is build in a lot of contingency. So as we get underground and as we drive productivity from the mine, we can match it with an increased milling rate for only modest capital costs. And we're on a defined timeline. So this is the timeline to first gold. We've got a number of catalysts coming up this year, and particularly in the next 8 weeks. So lots of news flow as we have a reserve update. We award the EPC contract and start ordering long lead items for the plant. We appoint our preferred independent power provider, a preferred underground contractor. And in the meantime, we're finalising our permitting and building the team to prepare to get stuck into the build. And I'll end with this great slide that shows the opportunity that building a new high-grade off-grid mine can provide to you. So feasibility study 2, right to the left of this, shows that Bellevue was forecast to be Australia's lowest carbon emitting gold mine on a per ounce basis when it's in production. And since we've done this study, we've discovered significant opportunities to lower the greenhouse gas intensity from that point onwards. So, and that's particularly through the introduction of wind generated power. So this creates a wonderful opportunity for us and the potential to produce something special, potentially the first zero carbon gold produced right out of Western Australia. Just wait and see. Thank you.
And that takes us to morning tea, and we are back at 11:15.